As the Keystone Pipeline continues to grab headlines here in the United States and the crisis in Ukraine remains uncertain, there is a lot of discussion about LNG exports to Europe. Here to talk to us about that and set the record straight is Dan Dicker, our very own. Dan, thanks for being with me.
Hi, Joe.
Dan, I know this is something you have focused on a lot. Last week I was at CERAWeek, spoke to Senator Murkowski. A lot of Republicans, politicians in general, have been saying we need to start exporting United States gas, also oil, to Europe. Let's stick to LNG though.
Right.
Why is this not a good idea in your opinion?
Right, and we should make a distinction between crude oil and LNG. I'll state just for a brief 3 seconds that you'd have to first change the laws to export crude oil, and I'm not sure whether anybody is actually willing to do that right now. So, but crude is an entirely different market and requires a different analysis. LNG is easily analyzable as a very, very bad idea, particularly for export to Europe, and here's why. It requires a lot of money and a huge commitment first to develop an LNG plant. You need close to $10 billion to build one and 10 years to build one from scratch. And if you're going to take on that commitment, what you need is two things. You need, first of all, some producer here in the United States to basically guarantee you a very cheap price for input natural gas for 15 or 20 years, and you also have to have on the other side an export market, or at least hopefully a European market, where prices for natural gas are going to be much higher than they are here in the United States. So you need that arbitrage. That exists right now between the United States and Europe, but the chances that that's going to exist, first of all, 10 years into the future after you build something like this, and then for 20 years after that, as you're trying to recoup the money and the investment, it's a very, very bad. Contracts that long-standing are possible, but highly unlikely and difficult to secure. And in fact, if you get more than one or two companies who are trying to secure these contracts, it naturally drives up the price on the import side, and it drives down the price on the export side. It's also a self-fulfilling prophecy. You can't get it done.
Yeah, and it was interesting. We got to talk to the Secretary of Energy at CERAWeek and ask him, what do you think about this? And he said, honestly, we don't even see enough research coming from the companies that says, all these laws should suddenly be changed and that we should be actively pursuing, this great exodus of U.S. natural gas resources.
Yeah, there's a question to be asked even on the back end of this on whether you want to be the kind of country that takes its natural resources and bottles them up and ships them other places when those other places decide not to develop their own natural resources, basically depend upon you to develop these natural resources and then ship them away from you. I personally have the feeling that a little bit of responsible development of fracking is a very, very good thing for this country, but should stay for the most part in this country so that we can benefit from the technology, the resources, and hopefully from the industrial renaissance that should occur from that kind of steady supply of a solid natural gas supply.
Dan, as always, good analysis for investors to consider. Maybe they shouldn't be rattling cages themselves, asking for all these changes immediately. Appreciate it as always.
Right.
That's Dan Dicker. He is our very own at TheStreet, and for TheStreet, I'm Joe Deaux.